Welcome, everybody. Welcome back. Welcome to the new year, 2023. This is Merrill Chandler with the Fundability Report. And in our highlighting our news, a couple of really cool things have developed or are in development. Number one, there's this financial idea. It's been on the books, has been talked about on white papers and theoretically for at least a couple of years that I've been aware of it. But actually, there is credit union is starting to implement what's being called an income passport. Now, an income passport is designed for gig workers and for 1099 employees who don't have a normal W-2 income, but have consistent income. They want, like, passports are similar to driver's license in being a government document, right? Well, in this case, they're converting 1099 income and gig workers to be able to provide documentation that legitimizes and substantiates the consistency of 1099 work, just like a W-2 does. The problem is that for mortgages, for auto loans, especially for business lines of credit, et cetera, and other business loans, the W-2 trumps every other type of financial support document, right? The verification of income. Well, yes, more and more we're moving towards automatic underwriting, but in many circles, gig workers, 1099s, have to substantiate. They're either higher interest rates or higher risk models are used because it isn't classified as consistent income like a W-2 would be. This income passport is designed to solve for that. So I'm excited. That's an amazing development, and I want to celebrate the credit unions that are working with this, because when it's a proven model, then I believe the mainstream banks, the top 40 tier 1 and tier 2 banks, would very likely consider it, because it allows more people to be fundable, and it's super beneficial in our models to be able to, in our fundability scoring, it allows us to create a whole new class of fundable borrowers that are in the 1099 or the gig economy. So I'm thrilled that this one is that is up and in play. Now, there was if you're into crypto, I always talk about crypto in a remote sense, because crypto doesn't have really anything to do with fundability unless you're getting a loan backed by a cryptocurrency. But 2022 hasn't been super awesome for cryptos, even though more and more central banks around the world are looking to create a digital currency. And so we've got this, imagine, it's the vodka Red Bull of financial instruments. I'll explain. Vodka Red Bull. Red Bull, a stimulant, caffeine, right? At the same time, you're drinking it with a depressant, alcohol. And so you get that weird feeling that you're accelerated and you're taking the depressive as well simultaneously. Well, right now, cryptocurrency and digital currencies from the central banks, including the Fed, have that sense to it. It's like, yay, the technology is moving forward, and we can do more on the blockchain, which makes everything more secure, using cryptocurrencies and using digital currencies from central banks. But there's a whole lot of inertia coming from the years and years, decades and decades of using fiat currency and paper money, etc. You might see, just like I have, that more and more stores you go into, they're saying, like, you need to give us exact change or use a debit card, because they don't have change. There's no quarters to be found anywhere, and there's just a lack of, in some places, a lack of ones. And so, whether, I won't get into the conspiracy theories of whether this is intentional to drive everybody to a digital or to debit cards and credit cards, but I do want to say that when it comes to fundability, what's going on with crypto, it's likely not going to be taken seriously to backstop loans, because there has to be a credible nature to what is being used as the security or the guarantee for the loan, and crypto's taking a hit when it comes to that. So more on, we'll keep you posted there, but fundability, it's not looking good for loans to back crypto. Last summer, we had talked in this very forum that there were a couple of banks trying them out, but with the volatility of cryptocurrencies and the security that they do provide, right? We're back in the vodka Red Bull idea. So, and then finally today, where there is I grew up back in the day, there was a banking crisis that was known as the Federal Savings and Loan Crisis. And so after that crisis was averted in the 80s and it kind of picked up, they really didn't fix the system. And the Federal Home Loan Bank focuses on farming, it focuses on ranches, it funds bigger properties, etc. But it hasn't been looked at in 90 years. And so what's happening right now is that the Federal Housing Finance Agency, which is the mothership, the FHFA is the mothership that sets the terms and policies for Fannie and Freddie, for FHA, for VA, and for the Federal Home Loan Bank system. All of them have had a makeover, except the Federal Home Loan Bank system. And so more on this, because what's going to happen is once for all I know, that entire system may go bye-bye, because Freddie takes finances, or is in charge of financing properties above and beyond the standard 1 to 4, right? And so we'll see what happens. But there are 11 regional banks that support the Federal Home Loan system, and they're coming under great scrutiny. So more on that, but just be aware. And we're going to be talking more and more about the I always get this wrong, the Federal Housing Finance Agency. So it's just the supervisory regulatory body, the FHFA, and that's actually what has approved FICO 10 and for mortgage processing, and Fannie and Freddie and all of the federal agencies who backstop federal home loans, and for Fannie, Freddie, FHA, and VA, they've approved FICO 10 for mortgages, and they have approved, for the first time ever, they've also approved Vantage Mortgage Score 4. So more on that as it comes to pass. We will see you guys next week, same time. This is the same time, same place. This is Fundability Report with Merrill Chandler. Have a good day.